The world is facing its most severe energy crisis in decades as geopolitical tensions push global markets to the brink of collapse. From London to New York, traders are scrambling to react to supply disruptions that haven't been seen since the 1970s. At the center of the storm is the Strait of Hormuz, a critical choke point that handles one-fifth of the world's petroleum consumption. Iran's blockade of this waterway has nearly halted marine traffic, causing a potential shortfall of 15 million barrels per day. The conflict, which escalated following military action in late February, has seen drone threats and direct interference with navigation. Brent crude surged past $119 per barrel, a level reminiscent of the historical highs seen in 2008. Washington has described the conflict as a short-term excursion, yet threats of further escalation persist if the blockade remains. In the north, Russian Urals crude has risen dramatically, surpassing Brent prices for Indian deliveries for the first time. But these gains are being erased by staggering freight rates. Shipping costs for cargo to India have hit $54 million. With freight rates nearly doubling in weeks, the logistical burden is becoming unsustainable for global exporters. For consumers, the reality is stark. In the United States, average petrol prices have soared past $3.50 a gallon. Across the Atlantic, UK drivers are facing a sharp increase, with diesel prices rising by nearly 13 pence in a single month. The transportation sector is reeling, with jet fuel costs forcing airlines to reconsider routes and passenger fares. Logistics networks are seeing delays and surcharges that threaten to stall the movement of goods across every continent. The crisis is also reaching the dinner table. Natural gas is vital for fertilizers, and as its price fluctuates, so does the cost of farming. Experts warn that every $10 rise in oil could add nearly 0.5% to annual global food inflation. In Canada, a major producer, the impact is divided. Producing regions benefit, while 60% of the population faces rising costs. Economists fear a repeat of 1970s stagflation as the link between oil prices and the Canadian dollar continues to weaken. Global stockpiles are already at 5-year lows, leaving very little margin for error as the blockade continues. The International Energy Agency and G7 nations are discussing the release of strategic reserves to stabilize the market. In Tehran, support remains firm, with the leadership vowing that no regional oil will be exported if their own trade is restricted. As Operation Epic Fury continues, the U.S. military claims to have neutralized key threats, but the blockade shows no signs of easing. Analysts are looking ahead to a volatile spring, with some predicting that oil could hit new record highs if diplomacy fails. Businesses are already pivoting, seeking ways to cut energy consumption and protect their bottom lines from the rising tide of costs. The coming weeks will be critical for the global economy as the world waits for a resolution to this unprecedented energy standoff. For Beacon News, reporting on the global shift in energy, stay tuned for further updates on this developing story.